All right, we're live. Welcome to Keeping It Real, the show where we learn from the top performing real estate agents and professionals. A little bit different show today. I'll get to that in a second. This show is being live streamed on YouTube and Facebook. So if you're watching live, go down in the comments and drop us your questions as the conversation progresses, and we will try and get to as many of those as we can. It's also never too early to hit that like button. After the show will be available everywhere on all the usual places: Apple Podcasts, Spotify, YouTube, Facebook. So if you miss it live, don't worry, you can catch it next time you're in the car. Keeping it Real has been around for years, and we've had some absolutely amazing guests that have dropped some serious knowledge bombs on our listeners. So in the last couple of weeks, we've had Sasha Chapman and Bob McCraney, both with excellent tips on from Sasha, growing your team, and Bob from guerrilla marketing. And last week, Abe gave some excellent advice on how to structure your day to squeeze the absolute most out of it. I am Chris Whitling, the VP of Marketing here at Real Geeks. As I mentioned earlier, this episode, we're going to do something a little bit different. We are going to be investigating what has been happening on the commercial side of the real estate industry. And personally, I never miss an opportunity to mastermind with people outside of my industry. I know you always take away, little new perspectives and hacks that you can implement. So with that, I'm excited to introduce our guest, Patrick Reis. Patrick, say hello.
Hey guys, how's it going? Thank you so much for having me on.
Yeah, thrilled. You want to start by telling us a little bit about your background?
Sure, happy to. So I graduated from SMU, Southern Methodist University in Dallas, 2011, and then started getting into commercial real estate. My dad's been in it. I just knew it was something I always wanted to do, which is fun, exciting. Each day is something different, which I like. But currently, I am the executive vice president of operations for Property Advisors Realty. Oversee operations. I do some property management and some leasing as well. And then also I am vice president of our acquisition side called Park Capital Partners. So I oversee asset management, acquisitions, raising money, things like that. So kind of a twofold business there. So
excellent. Love to hear the SMU connection. It's probably a little known fact, but Real Geeks headquarters is actually across the street from SMU. I don't know if you knew that.
I did know that. So I drive by it almost every day still. So
excellent. Well, as you can see, I'm not there all the time. So, all right. So, commercial real estate. I think, when we started talking about doing this episode, the number one thing that I wanted to know was like rewind to the beginning of the pandemic, when all the lockdowns hit and everyone's trying to manage, the new situation. What was happening? Like, how did you manage those early days? It must have seemed like the world was ending.
You know what? It did. I mean, when they announced, okay, everything's shutting down, and we were all kind of like texting each other like, oh my gosh, what do we do? What do we do about the properties, the tenants? Our tenants were emailing us and we didn't even have answers for them because we're like, well, I mean, we kept on saying, well, follow what the governor said, the regulations, everything else, and, just stay home for now. Here's our cell phone numbers, you have our emails, and we'll just kind of take it one day at a time. But immediately, as soon as it happened, we started doing conference calls every day with the team, with the property managers, the leasing guys, keeping us all up to date. And, it was just like, okay, what do we do? What do we need to do for filtration? UV, what's, how many times do we need to clean the bathrooms? If somebody is in the building and gets COVID, what's our procedure? Do we notify the whole building? Do we just clean that floor? And so I will say we jumped on it very quickly. We did a lot of UV filtration in all of our elevators throughout the properties. We put the signs out, our cleaning crews. If somebody tested for COVID, at first we notified every of the building and all the tenants, and then we would clean that floor, clean the common areas, and then clean that tenant space. So we were very proactive on it very quickly. But it was very interesting. So and the biggest thing was the tenants, because how do you talk to the tenants and advise the best that you can without giving him the wrong advice or stepping into it legally.
Right.
So we also had specific COVID attorneys that developed with our law firm that we use that would advise us and say, okay, this is what you need to put on the sign. This is what you should say, what you shouldn't say, just so, later on, corporate of one tenant wouldn't come to us and say, well, you told us this, this, and this, and, we did it. And, now this happened. So it was a very kind of slow process, but at the same time, bath by fire. And we were just very, very careful on how we handled it.
Yeah. I mean, so there's two things that I kind of heard there. And, I think the first thing resonates with me because, whenever you're confronted by, a crisis or a project that seems daunting, the first thing is take a deep breath, break it down into its component pieces and start executing. Yeah. So it sounds like that's exactly what you did, where you started just like really working on the relationship with your clients and working through it piece by piece.
Oh, for sure. And the other side of that too was the investors. We'd have our investors calling us and saying, okay, well, what are you seeing? I mean, our tenants not paying rent, this and that, because the investors were really nervous as well. So not only was it with the tenants we had to, talk through and everything else, but we had the investors as well. And so It was a lot at once just to kind of make sure everybody didn't jump off the edge. It'd be like, as you said, take a breath. We'll get through this. It's not the end of the world, even though it sure seemed like it.
Right. Yeah. I think the other thing that we talk a lot about on the consumer side is, providing value to the clients. And, you were talking a little bit about like sort of the COVID specific lawyers. And it sounds like, with the signs and the filtration and the extra cleaning procedures, it almost sounds like that fits into that category of, go above and beyond and try and provide these additional services to help your client manage the situation.
Oh, for sure. And, we want to have good tenant relationships. And that was one thing too. The CEOs thanked us for being proactive. So they also too can make their employees feel safe, but two, to try to get them back into the building eventually, because a lot of the CEOs that we talk to and across our portfolio, they want everybody back in the office. So the safer that we can make it and, make them feel good, one, they're more likely to renew. And, two, they just appreciate in general in terms of the goodwill and helping them try to get their employees back so they can get back to full strength.
Yeah. Excellent. Okay. So, when did things start to turn around? When did you kind of come out of like, maybe crisis mode? Because again, I know on the consumer side, it's the thought process went from, oh, this is going to be really bad to just like, oh my God, the market took off. So on the commercial side, when did things start to turn around?
Yeah, I would say, especially when the vaccine really kind of came out and there was a big boost of confidence there and people started getting that. And we had people start coming back into the office. And that's when we were like, okay, we're going to come back in. We want to show, the other tenants we're operating, and provide confidence for them. But even still, probably like last summer's where we saw leasing pick up. It took a while because some people didn't know what they're going to do, and they still don't. Are they going to downsize? Do they need to expand? How long of a term? And people still are kind of just trying to figure out, okay, well, I probably will need more space, but I don't want to lock down all this space now. And so, okay, give me an option here. And so I think still there's a little bit of a tentativeness, but I would say last summer's where we saw stuff pick up for sure.
Yeah. So let's start to dive into that. What has changed in the things that buyers are looking for now versus pre-pandemic?
So in terms of buying one product type, I would say one, everybody's still skittish on office. So we're seeing the industrial, the big box stuff, manufacturing, and flex stuff, single story office and warehouse is just exploding. I mean, one, price wise, cap rates are between 3% and 4%, and just the money pursuing that is ridiculous. Same thing for the leasing, because a lot of companies are feeling more comfortable with single story office flex where they can go in and out, no elevators, no common areas, access is easy. And so we're seeing it from a leasing side, that product type is really busy. And also from a buying side, it's just, it's exploding. On the office side, you're seeing stuff trade, but it's more like the very class A, the high end office stuff that's well stabilized, has maybe a live work play aspect to it, or really nice amenities that, you feel comfortable that you can continue to lease it, or good tenant retention and things like that. You can definitely see the lesser office is struggling for sure to trade. Suburban office is popular. But office, I think in my mind, is probably going to take another year or two to really kind of bounce back. In terms of the buying side, the leasing side, we're seeing it very busy, a lot of tours and things like that.
Yep.
But everything's taken so much longer. I mean,
okay, so the buying cycles have elongated, and I apologize, for my not really understanding the market here. I've been saying buying. I guess I meant leasing as well. So yeah.
And especially in the office side, the actually buying the property and the leasing of an office is taking a while. Everything's just decisions are taking longer, because on the buying side, you got to vet the tenants. And how do you vet the tenants in COVID? Are they going to expand, the downsize? Are they going to leave? What is their business model doing? So when you look at a rent roll, it's hard for a buyer to say, okay, well, hey, we're 85% leased, but where are we going to be in a year? Right. And so that is and it's taken a lot longer to underwrite in terms of the buying. But also in the leasing, once certain leases get kicked up to corporate may go all say, like, well, let's hold off. Maybe we don't need the space, or maybe we need more space and things like that. And we've seen deals fall through right up until when the leases getting signed, which is it didn't used to be that way. Normally when it went to leases, you felt pretty confident that the deal was going to get done. So
these leases that, or maybe let me ask the question this way. What objections come up in that late stage of getting one of these deals done that wasn't there before?
It could be a variety of things. It could be one that they decide that their business model is going to change, or two, they're having a harder time getting employees back in the office than they thought. So maybe they don't need as much space, or they're going to work from home longer. I think those would be the biggest things. It's trying to figure out, okay, how much space do we really need? And that's why we're seeing a lot of shorter term deals, 2 to 3 years, maybe some 5-year deals, but not the 7 to 10 year deals that you see anymore, because everybody wants a shorter time frame because they don't know what they're going to do.
I was going to ask, I'd highlighted in our notes, what about the terms, and has the deal changed outside of that? So you just addressed the terms, so shorter terms. Are there additional opt-out clauses or anything else that's changed?
Yes, you're seeing a lot more termination options and things like that for the flexibility, for sure. Where it used to be, we wouldn't do a termination option in a lease. It was just kind of our corporate policy. We wouldn't do it. And obviously that's changed drastically, because it's much more commonplace than it used to be. And obviously, you build into the lease that if they terminate, they've got to pay for the unamortized TIs and commissions and things like that. But it is much more commonplace than it used to be, for sure.
Got it. Are there specific reasons that are built into those contracts that give people options to leave?
Yeah, well, it's just normally you do it at a certain date. Say, hey, after 2 years, you can terminate, with 6 months notice or things like that. And it's a clause that's built into the lease. And when we do that on our Excel sheet rent roll, we'll kind of earmark it and know that, okay, this is coming up and things like that. So just to check in with the tenant and see, so we don't have a surprise.
So it's basically made your life a lot more complicated in both the financial modeling as well as, potentially for your business, just staying in touch with that tenant and making sure that they're happy and their business is going well.
Absolutely. It definitely has made things more complicated, for sure, in terms of an underwriting standpoint and from a leasing standpoint.
Right. Exactly. So in terms of the people looking for, office space to lease, what kind of things are people looking for these days?
Well, I think one, they're looking for amenities, and, not just amenities. I don't mean, just a fitness center and a lounge and a cafe. It may be, a tenant lounge that has a pool table and a dartboard and, different things like that. Like our office here, when we remodeled it, our tenant lounge now, we've got 6 TVs, we've got a big TV wall, we've got a little fresh come and go where you can grab food. We've got a wine cellar we installed in a bar that people can rent out and host events, pool table, shuffleboard, dartboard, and we've got grills and a putt-putt course outside. So I'm serious. So, but
Sounds great.
our intention here is we're always 90+% leased. So it's those kind of type of things, especially with people hiring younger to help them get back into the office, that it's, good and people are looking to install. The other thing too is location. And like I mentioned, that live, work, play, where they can walk to a lot of restaurants. Maybe there's a lot of apartments too. So maybe they could walk to work and then, go to restaurants, lunch, dinner, things like that. So you'll see like the Legacy area up north, kind of in the Frisco, is really popular. There's an area by us called Cypress Waters, which is a big development that's over a lake that got redeveloped, and there's a lot of restaurants and apartments there. So a lot of businesses, to attract people, especially younger employees, are focusing more on those areas. And
got it. Yeah.
We saw that pre-COVID too, but I think it's even kind of made it much more popular than it was. It was trending that way, but it kind of accelerated it.
So does it seem like the employees want to, and I want to come back and go deeper into this, but it kind of seems like in those mixed use developments, I'm thinking like the Domain here in Austin, the idea is to have like potential workers inside, that or nearby that office space kind of live in that same development, and they're kind of into that. Yeah.
Yes. Oh, for sure. Especially the younger generation, for sure. The older generation, people, I'm 34, probably people my age and higher, that's not that big of a thing. But, anybody 30 or under, I think when you're looking at a place you want to work in, it's a priority.
So. Right. I know I certainly can't stand long commutes. And thankfully right now, most of the days it's just up my stairs. But yeah, we've all heard like the anecdotes about, different generations and, whether or not they want to come back to the office. Like, do you get a sense talking to, your clients, the people shopping for office space, like what the composition of like those demographics are coming back to the office?
Well, I will say one thing: the older generation is like, we want you in the office. I want to see your face, and and that camaraderie and things like that, for sure. Even from some of my friends, I think it's 50-50. Some people really, really like it. Some are like, okay, it's too much. If they have a dog and, kid and their wife, like, oh, we're too compact. I think it's 50-50 in my opinion, in terms of working from home and all that. I think the tech industry, for sure, I think they'll stay home. I think they just adapted and they don't need the office space. But I think most other industries will come back fully eventually, or some type of hybrid model of hoteling, and where, okay, you're in 3 days a week, you're out 2, or you're in this week and then you rotate with another group next week, kind of type of thing.
Given those like sort of composition, because I've certainly read a lot of articles and, seen the like interviews with people that study this kind of thing. And it sounds like, what you were talking about, where you try and like focus people on certain days, or shuffle people through. Are you seeing like a composition change in the way that the offices are put together to accommodate that hybrid work style?
Oh yeah, I think you're seeing, especially people that are going to do that, you're seeing less offices and more cubicles, or you're seeing Zoom rooms, or like more bench seating where people can come in with their laptop or log into one computer. And so you don't see so much that typical, okay, I'm going to have stuff on my desk from like family and things like that. And they're going to do that kind of hoteling thing. That would be more of the model. And even you'll have some offices, but you'll have some where managers swap out. If they're doing that hoteling, we'll share an office or two. So
this hoteling is a new term on me. So basically it just sounds like, the office itself is potentially less personal because the occupant of it might be more transitory.
For some companies it could be, if they redo the space and things like that. And I also do think it depends on the industry.
Right.
But yeah, if company wanted to go that route, you would probably see, okay, hey, break room for people to do what they need to and things like that. But yes, much less personal stuff and kind of maybe more sterile, you could see.
Right. Okay, so I hinted at this earlier. I really want to come back and try and connect this to the consumer world. I am interested in, you talk about the mixed use developments, but has the distance that people live from the office changed, and has that changed when people are looking for office space? Kind of where they're thinking about putting the office. I want to kind of dive into where people are living and where offices are going and what the connection is there.
Yeah. Well, and especially if they're not doing the work from home, for sure.
Mm-hmm.
Like I said, and if you're trying to hire younger, you're going to want to be in more areas with a lot of apartments, a lot of restaurants, maybe some parks and things like that. And then so you can just, people don't have to commute around here. As I'm sure in Austin, the traffic is just getting worse by the day.
Yeah.
And so, people don't want to be stuck in traffic for an hour and things like that. So they are more mindful if they're moving around, especially a larger company, that they're going to go somewhere where, they can attract younger generation and, make it easier where they can all be in the same area or commute a couple miles and things like that. So that is more in the mindset, like Las Colinas, where our office is located, is they're doing a lot of developments around the lake there in terms of retail and apartments and things like that, trying to make that an area where companies will want to come because you've got the lake, you can walk around, you've got restaurants and things like that. So, which Las Colinas is helping kind of develop and make it more of a central location. So larger companies do want to come here, and whether they're out of state and things like that, because they know it'll be easier to hire.
So it almost sounds like, I guess, correct me if I'm wrong here, but when you're talking to potential lessees, the proximity to rentals is perhaps more important than proximity to homes for sale. Is that accurate?
It depends on what, the labor force you're looking for.
Got it.
If it's a little bit older, then you probably want to be closer to housing and, things like that. But if it's younger, maybe areas with more apartments and especially newer apartments and things like that. So it just depends on the labor force that company is trying to hire.
Got it. Yeah. I know go ahead.
With housing prices the way they are too.
Yeah.
So, you're probably people are more focused on apartments and things like that because, housing prices and interest rates going up are just making it very hard to buy right now.
Right, definitely. We certainly live in an interesting part of the world here in Texas because, you have Austin and sort of the core of Dallas, that are very large company focused and have these sort of mixed use developments you're talking about. But when you're driving between the cities, you also see the, sort of heavier industry going in that's just absolutely filling in the space between those cities. It's, I mean, yeah, Texas is full. You don't have to come here, but it's pretty great.
Seriously. As I joke, I'm like, we don't need to worry about the border to the south. Let's just border everything around the north so people stop moving here.
Yeah. Let's see here. So we talked a little bit about the work from home office balance. And we talked a little bit about, tolerance to longer commutes. Sean, I don't know if we've received any questions. You can hit those in the chat. If you're listening to this live, then definitely leave us a few here. So, I remember what I wanted to ask you. In terms of actually driving business for to find lessees, how has that changed? Essentially on your sales side. Talk to us about how long, we touched a little bit on sales cycles, but just what is the composition of that cycle actually been
in terms of leasing a space?
Yeah. That's kind of mainly what I was thinking there.
Yeah. So, normally we have a CoStar where our properties are listed on and things like that. And so we'll get calls and we have our leasing signs and, so we'll get calls and we'll set up tours, but it may be, okay, the initial tour, and then maybe you have middle management a week later, and then, somebody from the executive team a week after that. So, it could be, and then you start trading proposals and things like that. But I'd say now things are, 2 months to, 3 or 4 months sometimes to get a deal done. We had one group we worked with, they're headquartered out of Paris, and we worked on a renewal with them in our office building, and it took us 7 months to do a renewal with them from start to finish. And so, I mean, especially with larger corporate tenants, it has probably doubled in time, to be honest with you. The smaller tenants, 5,000 feet or so, or, lower than that, stuff will move still pretty quick. But 10,000 feet and above or anything with corporate is larger corporate tenants have taken a while.
Do you feel like that, like you're struggling to stay on their radar and you have to work harder to keep their attention? Or do you think it's just like all internal to those big companies and you kind of can do the same things, but it's just a much more protracted,
I think
time
it's
period?
more internal. It's just everything is just more spread out and taking longer. Because I mean, you check in with tenant rep brokers who are representing. Goes, well, no, I haven't heard yet. I'll check in again. Apologize for the delay. And I think it's just more internal with those companies.
Yeah. Where do you find your clients? Talk to me about marketing that you guys do to drive. I guess we probably stay focused on lessees here.
Yeah. So like I said, we've got CoStar that we put out there. We've got our website, and if people kind of research and they can look at our properties and things, and then as well, we've got leasing offices where we have leasing guys, and we get walk-ins all the time that we'll go show space, and then we'll do, our marketing team will put together flyers that we'll do email blasts out to brokers and things like that, saying, hey, we renovated this property, we've got this space, and and everybody's kind of also done more virtual, where you can do 3D versions of the space and things. So we can send links out and say, okay, hey, here you can tour the space and see what it looks like. And so that's a few things that we do try to get out there. But I mean, a lot of it, especially for if it's larger spaces, it's all tenant rep brokers who know that our building and that's there, and we have these type of spaces. And so that's what drives most of it, especially larger deals. Smaller deals, somebody may be driving by and seeing our leasing sign, and we'll call our phone numbers, say, hey, okay, can we go tour next week? So it depends, it varies.
The good old fashioned yard sign.
Yeah, pretty much.
Yeah. Okay. So maybe to encapsulate that, so it seems like on the smaller deals, maybe still like kind of that traditional flow, but then on the bigger deals, it sounds like you're having to use technology to minimize travel. Is that
Yeah. No, that for sure. And also too, it's good because most of the times the decision makers are probably out of state. So, the broker can send that on and say, or, we do a lot of, when we do space planning, we do a lot of Zoom calls with the space planner, and they lay out the plan and they'll draw it all up, and it'll be, the company architect from California. And so we'll all be on there and drawing it all up and things like that. So especially larger stuff, technologies come in handy to help us facilitate these deals.
I mean, it's kind of sounded like, what I'm taking away from this is like, you guys are having to work your ass off to get these deals done, where our, consumer side guys are like having multiple offers based off like putting up a listing on the MLS, just based off the photos.
Yeah. Yeah, no, it is. I will say COVID has definitely made things harder for sure. Whether it's refinancing a property or something else. Yeah.
All right. So have you done had any lessees or any spaces that have turned into co-working spaces? Like any insight on, this is a question from YouTube from Ed. Any insight on co-working spaces?
Yeah, we've looked at it just for some vacancies we've had. We've done space planning and maybe looked at turning it into co-working spaces.
Right.
Also, too, is that, like I said, when I talked about the hoteling and things like that, when we do some renewals, and they're almost maybe trying to turn it into co-working. I mean, WeWorking space where whether it's bench seating or, kind of Zoom rooms or collaborative rooms and things like that. So it's kind of a little bit of both. We haven't turned any of our vacancies yet into co-working space because we're still trying to see, okay, are people going to come back, or are they still? And we don't want to spend that money with the prices going crazy in terms of TIs and things like that to
Right.
build it all out and then it not get utilized.
So it almost seems like WeWork and that crowd blazed a trail for, traditional office planners at this point, because they're kind of like drawing off that experience.
Right. It's kind of funny because WeWork was probably a little bit ahead of their time. And then now with COVID, they're probably looking back and laughing at all of us because they're like, okay, well, look at all the stuff that we did, because you're definitely seeing an aspect of that. And you're seeing some buildings do kind of co-working spaces. I've toured a couple that they lease out and things like that. Or like I said, in terms of the space planning aspect, there is definitely now a component in terms of that kind of co-working mindset.
Right. Exactly. But you haven't seen that like as a business model, take off. It's not like that's not something you're seeing.
No, I don't think so. I do think also too, there's so many WeWork, places already in the Metroplex. Right. And you did see a few companies try to do that model even before COVID. So in my mind, I think it's probably a little saturated.
Yeah.
But, that may change if the whole, concept of, okay, well, people are going to work from home, but maybe they need a space to go and things like that. I think it just kind of depends on the whole work from home aspect. Like, our corporation's going to really be successful forcing all these employees back to work full time, which I know a lot of them are already talking about, okay, you want to work from home, you're not going to do the drive and everything else, but we'll reduce your salary. So, and which in their mind is a fair point. Like, okay, well, you have the convenience of not driving back and forth and working from home and you're all set up. So we're going to reduce your salary and see. It'll be interesting to see what people say and do to that mindset.
I know I've certainly been interesting seeing the trend of like people coming out of, California, specifically the Bay Area, into, cheaper areas, whether that be in Texas or, Boise, Coeur d'Alene, type areas. It's like, yeah, that California money definitely goes a lot further in some of those, more central United States regions.
Oh yeah. I swear, I think half the people now who bought houses in my neighborhood are all from California. They come here.
My next door neighbor. Yep.
Yeah. Like, oh, this is cheap.
Yeah. Right. Exactly. And, at least in the case of, in our neighborhood, it happens sight unseen.
Yeah.
So.
Oh, exactly. Yeah. It's like, oh, the for sale goes up and 2 days later they take it down. Like, oh, we're already under contract. And I was like,
yeah.
Nobody
okay.
even that.
Yeah, sorry to interrupt. So let's see here. We got another question from YouTube, and it seems like the question is, the on the consumer side, concern about like empty office space affecting the value of the homes in the surrounding area. And so maybe to, kind of twist this question a little bit, like when you're talking to your clients, like as a property manager, like what have you been talking about with them, especially like if the space is vacant, like in terms of maintaining it? Like, how have those conversations gone, and what have been the client's concerns?
Yeah, well, I mean, in terms of property management standpoint, well, from a higher level standpoint, for vacancy for us, one, we're not getting rent on it, but also two, we got to carry that cost, right? For the electricity, for the cleaning, and we hate vacancy, obviously, for many reasons, but it really,
yes.
it hurts our bottom line from a standpoint of in terms of operating the building. Because as you said, property manager, we still got to clean it. We got to make everything, change out light bulbs for showings, because you don't want to go in when we do a showing and it doesn't look very good. And then somebody's going to turn around and walk away. So it's a mindset too, that, the longer it stays vacant, one, in terms of the marketplace, everybody knows it's there. So it's like, okay, well, what's wrong with this space? And, having vacancies out there for a while, and also too, from an investor standpoint, and they'll be like, okay, well, why has this space been vacant for so long? And that's when we go in and we'll spend some money and we'll spec it out. Maybe we'll put paint in, we'll put some carpet, knock some walls out, maybe put some walls in and just spruce it up. We
Right.
don't do that initially, but if a space is on the market for more than 8 months, then normally we try to look at doing something. But also too, you don't want to go in and build too much and then have to go around and tear it out for a tenant who doesn't want it.
Right. So it seems like, if you're selling a home in the vicinity of a vacant office building and you're like, man, I really wish these people, would fill the space. It's like the property management and the owners totally agree with you and wish that.
Yeah. I mean, if there's a house surrounding and you got a fully vacant building, I guarantee you nobody's happy.
Right. Exactly. No one in that chain is happy. Yeah,
No,
exactly.
no one's happy. No, and sometimes you see if that happens, then it gets foreclosed on, and then weeds start growing, and then the property goes downhill. So yeah, nobody's happy with a vacant building.
Right. So so actually that's kind of an interesting point. So if you're seeing like the weeds grow and stuff like that, that probably means that it's not, like maybe actively being managed. It's probably more bank owned.
Probably, especially that, or I mean, it's not getting the attention it needs. So, but yeah, normally, I mean, if the building's vacant or mostly vacant, if the ownership is doing its best to try to keep it up and things like that. But at a certain point, especially if it's owned, they can't afford the note anymore, then it'll get foreclosed on. But,
yeah, that's bad news. No one's happy.
Yeah. But yeah, you can definitely tell who cares about the buildings, who don't. So yeah, if there's like weeds growing in the parking lot and a window missing, there's nothing good going on there.
Right. Exactly. Have we missed anything? Let's see, we're about 30 minutes right now. Anything else you think we should cover that we've missed so far?
No, I don't think so. I mean, good questions. We've kind of covered the gambit, I think, so far.
Yeah, definitely. Maybe we'll give it a second last call for, notes from Facebook and YouTube here, or questions from Facebook and YouTube. So it's fun doing the live stream because you get the immediate feedback and see, it's what you can do. It kind of messes with me a little bit though, because I got to like talk and read at the same time, and that doesn't always go well. Yeah, exactly. Right. Exactly. I'm a little bit curious just why we're giving it a couple more minutes, in terms of the Zoom rooms and the technology. Obviously Real Geeks is a technology company and I work for technology. My background's all technology. So I geek out a little bit, are the build outs in those Zoom rooms, like maybe a lot more specific, or like maybe how has that changed in terms of just like, I mean, like level of specificity that people are looking for, or like technology levels inside those rooms?
Oh yeah, I think instead of it being just a conference room, it's much more. If it's a Zoom room, it's much more, centric. One, they want to make sure if everybody can sit there, you can see each other. Good sound, microphone. It may have some speakers on the side of the walls or in the ceiling, so sound can kind of, one way you mute back and forth. There's a certain aspect to that. Just instead of just like doing, okay, well, we're gonna have a conference room, and we'll just stick a TV there, and if we need to conference, we will. But especially if a company's doing a lot of like Zoom stuff and things like that, the space planners are kind of being like, okay, well, how do we design this best to maximize that use for that space?
Yeah, got it. Cool. Well, I'm not seeing anything else come through here. So I think, why don't we start to wrap it up? Patrick, it's been a pleasure. Why don't you tell people where they can find you?
Yeah. You can go on our website at www.propertyadvisors.com. And that's got all of our information, what we bought, what we list, and everything else. And our information's on there. Or feel free to email me at patrick@pardfw.com.
Sounds great. All right. Well, we're going to wrap it up right there. And, you can find Keeping It Real on, all the normal places, YouTube, Facebook, the mastermind group. We can be found on Apple Podcasts and Spotify. So yeah, give us a subscribe and a like. And if you've got topic ideas, then let us know. Leave us comments on our blogs and we will chase after it. So thanks for watching, everyone, and we'll catch you next time.